Okay. All right. Are you there?
Yep, yep.
Okay, so
Are you sharing a screen or something? Or
now you're sharing your screen.
yeah.
I just want to request why is it not there? I'm not seeing the request button. That's a bit strange. Can you just check your settings and see? Because I'm not seeing the request button.
To record it.
Yeah, I'm recording it. Yeah.
I don't see any.
No, I want to see the request button to get control of your. But I'm not seeing it for some unknown reason. That's so strange. Why is that happening?
Let me share my screen again.
Yeah, yes, please. Yeah, that's what I'm. Yeah. I just want to get your controls, but for some reason it's not asking me to request the controls from you.
Remote control is this.
Yeah, I think you need to. Something's going on with your settings. I'm not sure. But on my side, it's good.
Use mouse to mouse X. Okay. Yep. Okay. You can control it now.
I've got control.
Yep.
Okay, cool. All right. First of all, did you do exactly what I told you to do?
No, I didn't.
Oh man.
I was just like trading off my phone and like just.
Okay. All right.
It
So
wasn't on my. I didn't even do like all of this stuff. I just did it in the morning today.
yeah.
I didn't have this when I was trading last night.
Okay. All right. So this is what I want. You mind if I delete everything off here?
Yeah. Feel free to delete.
All right. Okay, that's all right. This is all good. All right. So, see, remember what I told you? So, we're talking about yesterday's session, right?
Yeah.
So, remember what I told you? Okay, so you need to mark these levels off. They're really, really important. And this is what we're talking about. And this is why you probably didn't catch the move. You see how, and you didn't follow the EMA neither, did you?
No, I didn't.
There you go. See, that's the trend. See, the trend is bearish on the 1 hour, and if you go down to the 15, it would have given you an entry after it bounced. See, right there. It's easy as 1, 2, 3. Okay, so quick question: what lot size were you using?
I was using pretty small, like 0.2, because I had already drawn down quite a bit from Fridays.
So I'm just trying to understand so we can just go over it so we can get you back on track. So when you pass the first challenge, right, you got a new account, right?
Yep.
And then once you got the account, when did you get the new account, the stage 2?
I think I got it on Thursday night.
And you started trading on Friday, right?
No, I got it on Thursday night, and then I like did like a kicky trade, and it didn't go well. So I was like 1% down already.
Yeah.
And then I was like, okay, that's enough. And I went to bed. Then the next day I was like super keen, and then I did like a trade during the Asia session, which I shouldn't have.
No, you've broken all the rules.
I know, yeah. Phase 2, I just broke all the rules.
Yeah, it's a common thing.
All over the place.
Yeah. All right. So yeah. So my brother, as I mentioned before, if you can stick to what I told you. All right. So let's just refresh. So I told you to go on your 1 hour, right? Because it's more defined. Mark off the wick of the Asian Open, which is here, one there. The first retest was about here. You can see the retest of the high. Okay, then it broke this structure. Once it broke the structure under the EMA, it's completely bearish. It's no longer bullish because he hasn't broke above here and retest. So now come Monday, which is here, can you see my cursor moving?
Yeah. Okay.
Come Monday, here is Monday. So you now know that for price to break anywhere in this region, it needs to break above this high to continue for a buy. If it doesn't break and retest this high, you're not looking for buys, you're still looking for sells, right? So come yesterday for the sell, I got in just as New York session open, or just probably about 5 minutes after, because I saw the entry and I took it. So
what time's New York?
So New York was 9:30 a.m.
Okay.
Right? So then I got in.
Trade after 9:30? Like you don't trade before 9:30?
No, I don't trade before 9:30.
Yeah. So 9:30 would be 11:30 p.m. for me.
Yeah. And you only need to trade for an hour. You get your setup within the first hour of New York Open.
Yeah.
You get your.
Would be fine for me. 11:30.
Yeah, you just trade for like 40 minutes and you're out the market.
Yeah.
You take 80% of your profit and then you let the other 20% run to hit your take profit. Okay? Alright, so yesterday you would have opened up your chart as I told you. This is the Asian session candle, this candle here. Once this structure has been marked off, that's a rejection candle. What you're looking for is this candle right here. He's showing you double rejection from this region here. So first of all, you have this push, reject, break, give you a rejection here, another push here, reject, broke, right? What you're looking for now is to set up the first lower high rejection, which is right there. Now, once you see that, you say, okay, so New York session is literally look at this. That's New York session right there. Look at that. The EMA never lies. Look at that rejection.
At 9 o'clock.
At 9 o'clock. See, look at the yellow. 9 a.m. at the very bottom.
Yep.
I got in, I think, literally off this candle here. Literally, after I saw that rejection after it, that's why I always say to you, I told you this last week, use the EMA. Once you see that rejection in your direction of the EMA, after you confirm all your confirmation, which is, it's so simple, Winston, is crazy. Like, if you follow what I'm telling you, you can't go wrong. Mark off the Asia section, looking for the first, so this is the rejection to the downside, push back to the upside, you then mark that off, wait for a lower high to form, which is here, then you mark this section off. All you're looking for is that W pattern, and once the structure of the W pattern is broken, which is right there, just take the sell. You don't even have to second guess it. because that's your W pattern. Once generally when on a W pattern you're buying above, right, which is complete rejection from previous days. So now it's broken the pattern, which means high, lower low, lower high, lower low, right? Then it came back to test that same lower high, and what happened? It rejected it. So now you're waiting for it to break structure, which is right here, which the EMA reject, the candle reject off the EMA. So you just take your sell. It's as simple as that. You're taking your sell, and then I told you refine for your stop loss. Look at that. Look how perfect that is. It's just too perfect. And then always target 2 to 1. About there. That's just too clean of a move. That is as simple as that.
Yeah, okay.
It's please, I'm really asking you, if you can, what I need you to do is this starting today. Forget London. You're gonna get frustrated. It's gonna chew up your money. It's gonna cause you a lot of grief. Not until you start getting some serious profit, you start trading London session. And I'm gonna say something to you as well. Do not trade. If you want to switch back to London session, don't trade gold. Trade GBP JPY. You will have way better returns. Way better returns on GBP JPY, because it does move during London session. However, it does move a lot more in New York session, but you will get a way better return. The moves will be way cleaner, and you'll be more profitable. But if you're gonna trade gold during London session, it's gonna retest until it comes to New York, where all the liquidity comes in, and then it just makes that big move. That's just how gold operates. It took me a while to figure it out, but that's how gold actually moves. But this move was a textbook move. It's as simple as that. And I'm always right about where to mark off the rejection zone. You're just looking for that first open. That's why I gave you the session separators, so you can focus on that, and you just mark it off. And the last thing that you're looking for is that rejection of the EMA. That's your last confirmation. And then once you see that rejection on the 15-minute, you move down to the 5-minute to refine the entry, because that's where you need to put your stop. It's as simple as that. Simple as that. So let me ask you a question. What Blue Guardian, do they have a one-step challenge?
Yeah, they do, but the drawdown's like a trailing drawdown, which I don't really like.
Okay.
So, like, yeah.
Because
I've had bad experiences with trailing drawdown. Like if you make a loss, and then eventually you don't really have much of a buffer.
All right, so I love one-step challenge, and I always promote them. The reason why is because people get paid. I know the daily drawdown is a bit less than the traditional 2-stage, but once you pass the first stage, you know the second one, you're getting your money back that you've spent for the challenge. So all you have to do is make $20, and once you make $20, you now get your fee back. You can then buy another challenge, and you just got paid your first payout, even if it's $20. So my suggestion to you is, because you understand the Blue Guardian dashboard, I suggest you stick with them. However, if you ever choose to go to Funded Next, just go through their website and read up a lot about it, and go from that. If not, what I suggest you do, your next move, this is another move. I'm not promoting any prop firm because I don't, but I'm just trying to get your confidence up so you can start making some money and start moving forward and start feeling positive. The next firm that I suggest that you don't have to do a challenge is Audacity Capital, but they start off at 15k. The only trick to this one is if you can make the 10% within 30 days, you get 80%. If not, it's a little bit lower, right? The returns. They don't refund your fee, but you've got a full funded account. You don't have to do any challenge. So all you need to do is reprogram your mind. Okay, this account, I'm going to do a challenge to get 1500, right? So that's what you're just training your mind to think, oh, I'm doing a challenge, but you're not. You're actually getting paid. Once you hit the $1,500 mark, they take half, give you half. Your account size double from 15 to 30. Then you now need to make $3,000. Once you make 3,000, you give them half. Or depending if you pass it within 30 days, they will give you a little bit more than half, right? And then they double your account size every time you hit the mark. So, but I'm trying to get your confidence up. And another thing too, if you're going to trade with Audacity Capital, I suggest that you go for like GBP, JPY, which fits with your routine. You can actually trade that pair during Australian time. It's not a problem. That pair moved between Asian session and the end of London overlap in New York. You won't have any problem with GBP, JPY. It will move. So that's another pair you should probably look at. Okay, and I can show you something as well that I show you, because I'm currently don't trade GBP, JPY, but I saw a move from last night and I'm actually in it right now as we speak. Where is it? GBP, JPY. Is that it?
Yeah.
Yeah. Okay, so I'm currently in the trade now. It's a bit of a consolidation zone, right? And I've been watching it since last night. It's been playing up a little bit. I was in a bit of a drawdown, but I'm just giving it a bit of time to feed out, right? So sorry, I'm just switching over just to show you. My bias on this today is a sell, right? But let's see how it goes, because the market currently is trying to correct itself. So this trade is a bit of a risk, but I'm in it. But it's a bit of a risk trade, but that's all right. It's a bit of a risk, but it's all right. So I'm currently in it. I've been watching it from last night after I took the gold sell. So I've had my eyes on it all morning. Watch how this goes again. Exactly what I'm telling you how this thing works. Is what I'm teaching you is my strategy. It's so easy and simple. Like, and just watch how the EMA is gonna come into play. Just watch this. The reason why I'm taking the sell is based on this candle. See this big rejection of the EMA?
Yep.
All right. That's what I'm focusing on. So last night I was watching, I got in it last night and made a little bit and it took me out, and I just go, you know what, I'll leave it alone because it was consolidating. All right, so then push. All right, now look at New York. All right, so that's the New York 9 a.m. right? So I just waited to see what was going on, but I saw that it was consolidating within this region. It wasn't making too much of a play. So it tried to break out. If it was a buy, I would have waited for it to break and retest this level, but that didn't happen. It broke, and I was watching the EMA as well, so it rejected it. So then I came back this morning and I saw the play again that it's not breaking this level. So I said, okay, fair enough. So the reason why I'm saying it's a bit of a risk trade, I should have waited really and truly for it to really break the structure here. Break, retest, and go.
Yep, but it hasn't done that yet.
Sorry?
Yeah, it hasn't done that.
It hasn't done that yet. That's what I'm saying. It's a bit of a risk trade, but I've got a tight stop on it anyway. But the reason why I took it is because of this candle. So rejection, right? It hasn't broken this level. I'm still watching. Right? It's just sitting on the EMA, right? So it's just right on it. I'm just it's because what I'm looking for is for a big drop on the 5 minute, but my stop loss is just here, so it's not a big deal. It's not a big deal. I'm looking for a big sell-off on GBP JPY, so my stop is very tight. So I'm looking to take it all the way down to 185. That's what I'm thinking. Right here. That's what I'm aiming for, that drop. But for that to happen, I need to break this structure. But I'm still watching it. So if it takes me out here, that's fine. I'm just going to re-enter back in this zone right here. And the point of this conversation is because I was telling you that you can trade GBP JPY between the Asian session and the London session, overlapping the New York session. That's fine. This pair, no problem. But with gold, you have to be very careful. Right? You can get your 20 or 30 pips out of GBP JPY just before you go to bed. That's not a problem at all, as long as you know what you're doing and just following what I'm trying to show you. But going back to what I'm saying, Winston, look how simple my strategy is. It's a no-brainer. It took me a long time to figure it out, to get it to this point, to make it this simple. You're just looking for the previous day rejection. That's all you're looking for, and keeping your stop tight by going down to the 5 minute to refine it. But the issue that you're facing is that you're getting in too early, and yeah, and you're not following the setup.
Yeah, I know. Yeah, I'm just following up the like Kanashi candles, like it was like green, and I was like, okay, just go by. But yeah, I was just all over the place.
All right, so what I'm gonna do?
I was also micromanaging too much, I think.
Yeah.
I had some good positions, and then like when it was up a decent amount of profit, but you hadn't hit my TP, I would move it to break even.
Yeah.
And then it would like wick out my position, and then it would go back and hit the TP afterwards. So I had a few of those, which was very frustrating. So I think that sort of caused me to just go blindly, in and out on too many trades.
Yeah. Okay, but my $1 million question to you.
You don't micromanage, right? Like you don't sort of put it to break even with it.
No, I let it go into at least say for example, right? I'm targeting say 100 pips. Let's use round numbers, yeah?
Yeah.
I generally break even at 50.
Yeah. Okay.
Because you got it. So because what happened is that especially with gold, US 30, NAS 100, what generally happen is they've got a way of retracing, and they do it so rapid and then drop or push to the upside. So over time you understand how these pairs move, and they're quite sporadic, so you got to work out a way for it not to take you out, and then you have to re-enter again, and then the spread is a little bit different. So all these things you have to keep in mind as well, that your spread is very, very important, because you don't want to get in and you have a good position and then the thing just retraces and takes you out, and then now you have to try and get a position back, and it's just a worse off position. Now your stop loss is going to be worse off than what it was before. So, and another tip as well, if this ever happens to you, what you do is you lower your position size if you're getting back in the trade.
Yeah, okay.
Does that make sense? So
it does, yeah.
yeah, because what's happening, just in case the spread change, you don't want to, you can't. So what you do is you lower your position size, like divide it by 2 or 4, whatever it may be. You enter the say it takes you out, you see that it's going up or going down, you re-enter, but you enter with a much smaller position size, and then you just keep scaling in quarter at a time, once it start moving in your direction, and then you lower your risk. So at least the first position would have been in profit. So when you start scaling in, it's actually absorbing that profit, and when you start pushing in your direction, then you just balance out. So it does all these little tips and tricks that you gain over time, but it's just being disciplined with the first entry.
Yeah.
Right?
With the scaling, like how much do you sort of scale, like in terms of the move?
Yeah.
Like 10 pips of profit or 20 pips of profit?
Yeah. Right. Yeah. Perfect. Yeah. 10 to 20. So my first position is always heavy. So say for example, I'm trading a funded account, right? Say I'm trading 100k for example today, yeah? On 100k, I try to keep it to about, I always divide up my lot size. So on 100k is always 1.25, 1.25 or 1.26, right? So I always do 4 lots of that, right? So I generally do 2 entries straight off the rip of 1.26 or 1.25, whatever it may be, and then once those 2 are in profit, say at least 25 pips, I scale in another one, and then I scale in. So I try to keep it around about 25 pips, to be honest with you, because I like to be between 25 and 50, ideally 50, because once you take those other 2 positions, you really just absorb that profit. And then I use my stop loss for those other 2 entries for my first entry. The second 2 scaling, I use the first entry as the stop loss. Does that make sense?
For the first entry, where do you move the stop loss to break even?
No. So say for example, I'm taking 4 positions, yeah, of 1.25 lot. So at opening, I'm taking the first 2 entries. Say I'm getting in at say 19,000 for example on NAS 100, right?
Yep.
I am then scaling in at 19,025, right? 19,025, right?
Yep.
Once I enter those 2 positions at market execution, I'm then using the stop loss off the first so the first 2 entry, whatever that price is, I'm using that for my stop loss for the last 2 scalings.
Makes sense, yep.
So what that means is, if it comes back for any unknown reason, I'm getting taken out exactly where I entered the first 2 positions.
Yep, okay. First 2 positions, yep.
Yeah. So what that's telling me now, if it comes back and take me out at my very first 2 entry, is telling me that the market is no longer going my direction. So now I must reassess. So one of 2 things I need to do. I either need to, well, obviously the market would have taken me out, so now I just need to relax, watch what the market's going to do for the next 10 to 15 minutes. If it changed bias, I reassess it and see if that's a valid trade. Then I hop back in and take it for, if I was in a buy, then I take it for a sell, and vice versa. So that's what I will personally do in that respect. So it's all these little tips that I've gained over time for myself, right? And that's how I'm always in profit, is because I'm just following suit. I always divide up my lot size. So say for example, you are doing a 100k account. When I'm trying to pass a challenge on a 100k account, I'm doing 4, obviously I'm doing 4 lots of 8.26, because I'm trying to pass the account in one go. But it's gonna be a very, very good setup before I do that, and my stops are gonna be very tight. They're gonna be 250 to 350 negative on each entry. And that's how I try to do it all the time. I'm going in very heavy, 8.26 times 4.
Yeah.
Right? And my stop loss is very tight, and I'm passing that account. I'm gonna try and get at least 8k off that first move. Worst case scenario, if I get 5, I take it and call it a day and come back tomorrow, because now I've got a buffer. And then tomorrow when I come back, I'm looking for a very good setup, because now I need to get another 5k, which is not gonna be much.
Yeah.
And that's what
Pretty aggressive, yeah. I don't think I'll be able to do that.
Yeah, I know, but I'm just telling you how I do it. And then once I get to the funded stage, once I get to the verification stage, I no longer do 4, I do 2, 8.26. And I'm looking to finalize that over the next 5 days. So I've taken off that edge, knowing that, okay, I've passed the challenge in one go. Now I'm just going to take it easy with the verification. I'm going to drop my lot size, and I'm only go about 8.26 and times 2, and that's it. But not to get carried away from what we're talking about. So moving forward.
Can I just ask?
Yeah, sure.
Why do you have 2 lots? For example, that first example, you have 1.25 lots and 1.25 lots at market execution. Why would you have 2 lots of those and not 2.5?
Because with me, I like to see if the market, first of all, I like to see if when you do market execution, you're always going to be in drawdown.
That's right. Yeah.
Right? So say for example, you hit market execution, right? And your first trade, your first entry goes into, like, say $30 negative. By the time you hit the second one, right, you're half that, and you're in the plus. So that's why I always do that. But if you go 2.5 off the rip and it pulls back, you're negative straight away. I'm always trying to gain some profit. It's all about techniques. It's all about techniques.
Okay. Those 2 lots, they're not the market execution. They're at different times. They're not exactly on the same.
No, they're not the same time. No way. Okay. They're gonna be at least 30 to 60 seconds apart.
Okay, cool. Yeah, I just want to understand that.
Yeah. Because the thing is, Winston, remember, right? It's all about the techniques when it comes to trading. That's why psychology play a big part as well. Because you have to remember, there's always gonna be a drawdown. So you're trying to minimize your drawdown as much as possible. That's what you're trying to do. And by doing that, you must work out a way how to minimize that drawdown. And that's what I've worked out over time. Just break your lot size up. I've seen people gone in with 10 lots and the market pull back and take you out. Because the market can pull back. It's not guaranteed that it's not going to. It can do whatever. What you're trying to do is minimize your drawdown. That's why you're managing your risk. I'm a big advocate of that, managing your risk from the get-go. From the minute, as I go back and I said, when I was talking about being aggressive on the challenge phase, is because I now know that I want to have a buffer. Because if you don't get a buffer in your first 2 trade on a funded account, the theory is that you will have a drawdown of $1,000 or 2 if you're using 1% or 2. So you must be a sniper in the sense that you want to try and get up at least 2k to 102k for you to be in the plus. Because if you're not positive on your first 2 entries, you're gonna be negative, and then your psychology is gonna be all messed up. Right? So yeah, and as you said before, yeah, you're not at that stage yet, which I understand, but I'm just telling you about how I would approach it. That's how I would approach it in that sense. But not to get drawn off the topic, I just want you to please focus. I just want you to.
Yeah, I think I'm just gonna focus still on gold and do.
Yeah, that's what I'm saying. Exactly. Don't switch, right? You just need to just work out your session times. So if you can see, I'm gonna leave this for you, right? But I just want you to just focus on just this one, just my setup, and just try and incorporate it into yours. And then it will, and just test it out. So for your next challenge, you just test it out. Or what you can do, instead of go buy a challenge, you just put that challenge money into a live account and just see if you can double that money and then buy yourself 2 challenge accounts. So I would just want to give another demonstration, and then I just want you to go over it again and just tell me if it makes sense to you. So I want to go back as far as here. Let's just find this bullish marker, because sometimes it's easy to show people demonstration with a bullish and bearish candle, but this is a full bullish day, which is perfect. Full bullish day. Can you hear me? You there?
Yep, I'm here.
Yeah. Thought my microphone cut out. All right.
Yeah, so Asia Open, it's broken previous day's high.
Yeah, perfect. You got it. Right. Sometimes it's always good to look left to see what happened in the past. Okay, that's all right. It's no issues. All right. So the day is very, very bullish, as you can see, right? Very, very bullish. All right. So in this scenario here, what you need to do, because you've had no retests throughout this session here, what you need to do is to wait for the New York candle, right? Which is the 9 a.m. candle, which is right there. See? Look at this. How perfect that is. That's just crazy. So if the day is fully bullish, do not take any trades. Right? Just wait for the New York. All right? So look at this now, Winston. Look how crazy this is. You see the whole day is bullish, yeah?
Yeah.
Then you have your New York session, which is right in this region. Then what happened? You have a retest. And I always say mark off your retest rejection zone, because it is important. Okay? And that's exactly what happened. Look what happened. You wouldn't have taken this trade, because guess what? Price didn't break above the New York high. But guess what it did? It went sideways. So if you're taking a trade in here, one of two things: you just keep hitting your stop loss. Does that make sense?
Yeah. Okay, so you needed to break that high and then retest.
Correct.
Make it again after it.
All right. So let's show you this perfect scenario. See, it broke here. Well, it tested it. It didn't break. Tested it. This right here, these two candles. Test. Test. Close. Close. Then you have a bearish candle. Retest the zone. But now you're looking for a candle reverse pattern. This should have been another bullish candle here. That didn't happen. If there was a bullish candle right there, you'd have come down to your 5 minute. Let's pray that this takes us all the way back. If not, we've got to do it on the 15. If that was a bullish candle, right, it would have retested again and you would have taken the entry. But look what happened. It broke the structure and came back into consolidation again. But it respected the first rejection of the New York at 9 a.m. So it respected this area because this is consolidation. And this is why a lot of people get knocked out in trades, is because they don't know when the market is actually consolidating, because they don't actually understand the structure and they're getting in too early. So say for example, you notice even though the market was bullish, I still wouldn't have got in because I stuck to my New York session. Does that make sense?
Yeah, okay, yeah.
Because I didn't.
The New York session as the support and resistance, and then it didn't break.
Exactly, because look at this, Winston, right? This session here, this is Asian and London throughout this bit. But because I'm not trading these sessions, I really don't care what it's doing. If it's bullish or bearish, I don't care what's going on during this session, right? I'm focusing on the New York session. So if it's not giving me anything, I stay out of the trade for the day or look at another pair, right? And look at this, because it didn't break this level of resistance. I'm not interested for a buy. I'm waiting for price to break this support here for a sell. So I want to see it break, retest, and continue. It's as simple as that. It's not difficult. You just have to stick to one session, and you must get a retest within that session. If you don't, you leave the session alone, because if it doesn't retest, you're setting up yourself for failure. It must retest, because price move in waves, and if it keeps going, it means that why isn't it retesting? It's telling you something. Why is it maybe off news why the price is moving that fast, or whatever it may be. So you need to check your calendars and see why. Was there news the day before? Was there news on the day? You need to check all these things.
Yeah.
So going back to what I'm saying, you trade in gold. Yeah, I can hear you. Go ahead. Yeah, I'm saying now that if you're going to trade gold, I would say stick to the New York session and follow those simple steps that I'm telling you, because it's so easy and you're going to take out all the confusion and all the stress.
So with the New York session, I'll just look at a chart at 9 a.m.
Yes.
And then based on the analysis, take a trade, I don't know, anytime, so between 9 to 10?
9 to 10, 9 to 10:30 New York time, you're at the market. Kiss it goodbye. Take your money. See you later.
Okay, so definitely leave by 10:30.
By latest 11, because what happens is, don't forget the stock market, they go on morning break or lunch break around about that time. So the market is just going to be tickering in consolidation until it breaks out again around about 1 to 2 p.m. their time.
Yeah, I think as I mentioned in my message, like I noticed a lot of reversals happen at 9:30 a.m. USA time. I think that's when the New York Stock Exchange opens as well.
Yeah, so it's probably just retesting certain levels, and that's what I'm saying. You probably think it's it's just retesting levels of the day. That's all it's doing. That's why you need to understand the structure, and that's the reason why you don't get in until after 9:30. It's important because you need to see that formation happening before you get in. It's important. You need to have a structure. It's like, for example, building a house with no foundation. If you put it up, it's going to fall down. So what you're waiting for your support and resistance, right? Which is this. Support, resistance. Now after I have these two, I now see that the whole thing is consolidating. So why would I take a trade?
Okay. And can I ask, what's considered like a break of this structure? Would it be this kind of candle where it's broken?
It is broken in some ways.
In some way, but then you would watch for the next candle to make sure it's not going down.
Correct. So if you look at it as,
so for example, like this breaks and then the next candle like that, like you would sort of take a position like, I don't know, would you do like a position like that, or you sort of
no, because you want to see the reversal pattern after that bearish candle.
Gotcha. Okay.
Yeah. So
this one, though.
yeah. So remember what we spoke about last week? Hang on one sec. Let me just borrow this. So remember last week we were talking about once it breaks the structure.
Yep. It will retest.
It will retest, which is this candle here.
Yep. Wait for a reversal pattern like a pin bar.
Correct.
Yep.
Then once that happens, you go to a lower time frame, which is the 5 minute, right? Yep. And the 15 minute.
See lots of green happening.
Exactly. Exactly. So let's just go down to a lower zone. So what would have happened is that if this was a bullish candle of some sort here, it would have retested you could see probably 1 or 2 5-minute candle retesting, and that's when you're taking your entry, because your directional candle is bullish, right? So looking for those little retests, because after the first retest candle on your 5 minutes, sometimes it doesn't happen. But what you're gonna do, you're gonna put your stop loss below the resistance zone if you don't get that 5 minute rejection. So say for example, this 5 minute here was a rejection of the bullish candle. You would then put your stop loss, if you're going for a buy, just right under there.
And risk risk like 1%.
Yeah. And then you just always go 2 to 1.
But if I was doing that 2 lot sort of strategy, would it be risking 0.5%?
Each,
yeah.
Yeah. So that's why it's important to always remember. Okay, so let me just go over this with you. So let's say you're trading a funded account, yeah? My rule is that I always go for 2%, right? Meaning 2% profit. So I now need to work out, after I mark up my zones and look and do my full calculation and thinking, okay, this just need to move this many pips. Once the first one, the TP1, I'm closing that trade fully, and then I'm taking 50% of the second one and let the other one run 50%, right? So you need to have a mindset going into the market to say to yourself, okay, I'm using this lot size, I'm taking this much risk, and this is how much I'm going to lose, and this is how much I could potentially make. So you must always have that ready to go. How much am I risking? And I always stick to my fixed lot size. A lot of people don't like it, but the thing is, I now know in my mind how much I'm going to lose. I already know that. So if it pulls back on me, this is how much I'm going to lose. If it goes in my favor, this is how much I'm going to make. And I always have that. But the reason why a lot of people blow their account is because their lot size keep changing. So their risks keep changing. So that's another thing that you have to keep in mind, that your risk can't change. It has to be the same. Because at the end of the week, everything adds up.
Yeah, the way I do it, I do it based on percentage.
Yeah.
But obviously, depending on the stop loss, that will change the lot size.
Mm-hmm.
Are you saying you don't recommend that, sort of have a fixed lot, but then it sort of affects the stop loss position?
Yeah, I rather go with fixed lot. I don't go percentage, I always go dollar value, because it's just easier. It just go on dollar value, just easy. I'm risking 500 to make 1,000. It's just easier. But everyone's different. I can't tell you how to do it, but I'm just telling you, I just go dollar value. With trading, Winston, I used to make it very complicated, and because I make it so complicated, I was losing money. And then I just say, okay, let's just make it simple. And when I start making it simple is when everything start working perfect. The minute you start overcomplicating it is when everything start going wrong for you. You know what I mean?
Yeah.
So my advice to you is just to keep it simple. Just follow my strategy for at least, okay, follow my strategy for at least a month, or even so, try it for 7 days. And if it works for you for 7 days, it could potentially work for you for a fortnight. And if you try it for another week or two and it works, then it is the strategy.
No, like, to me, I know your strategy works, because otherwise, you know, you wouldn't be profitable. But for me, it's just a discipline to stick to a strategy. That's my issue. It's just
correct. So
the market opens, like, you just want to get into a trade and you sort of see the candles and you're like, okay, it looks like it's going to go, but then you're not following the strategy.
yeah. So to eliminate that, all you got to do now is say to yourself, all right, I'm not going to touch the charts until 9 a.m. New York time, which is 11:30 p.m. our time, right? So that's going to be the first time you are getting on that phone of yours. You're not going to look at it. With me, I don't look at my phone. I try not to. It took me a very
look at the phone, it's like, oh, it's game over already.
I know, that's right. Once you look at that phone,
yeah, I was looking at during Asian session and I was like, oh, it's like,
it's a move.
I'm like, I gotta get in.
Exactly.
The moment I get in, it just reverses.
Exactly. It's because it's not your session. Yeah, I know exactly. I've been there, mate. I've been there. I know the feeling. You get in there, it's like, God,
During Asian session when I shouldn't be.
Exactly. Like, it's not a problem if you're in a trade from New York and you roll over into Asian session. That's fine. I do that every day, all day. That's fine. That's perfect. Because you're deep in profit anyway.
Yeah, you probably would have taken off a bit.
Yeah, you're taking 1.5 off, you know? So you're good to go. But when you're trying to trade a session that's not yours and you don't understand the dynamics of it, it's just going to stress you out.
Yeah, I was chopped a few times. Like, I was just, oh, it's trending really well. And I'm like, okay, and then the moment I enter, it's like, bang, goes against my direction. I'm like, why did that even happen?
Yeah.
Yeah, funny how it works like that.
Okay, so this is what we want to do. So just write these 4 things down. You got a pen there with you?
Yes, I do.
Alright, so this is what's gonna happen. Just give me 2 seconds. So first thing first, look at your daily sessions, whether it's the previous day or the day, whatever it may be. I suggest you always look at the previous day. So for example,
the New York session time?
Yes. I suggest you look at the previous day.
Yep.
Always. It's important because you want to see how market move the day before. So let's have a look at this. So this is the previous day. This is the current day, for example. Right? It would have still given you the indication that price is still consolidating, even rolling over to the following day. Price is still consolidating. Right? And moving sideways. So you are aware now, I'm not going to trade because the price ain't moving in it's not breaking any structure for me to take a trade. So you'd have stayed out of it. You'd have still been positioned. You would have not lost any money at all. So, but the first thing that you need to do, the structure would have still marked up from the previous day. So now what you need to do, you need to come, as I mentioned, so first thing first, write this down. Mark off your first Asian open candle, which is this candle right here. Alright. Second thing you're looking for either a break above the first rejection, which will be this candle here. Alright. Alright, so this is yesterday, today. Now, New York is literally right here. New York candle is right there. So now you're still in that sideways movement since yesterday. Now this look okay, perfect. Look at this now. This is so perfect. Look at this now. This is how simple this strategy is. Remember, you've marked off from the previous day the first rejection of that first bullish move through Asia and London, right? Then you're in New York right here. That's that support structure here. Price tested it, never broke it. Before you got to New York, price tested it. So now when you open up your phone or your laptop when you're at home, you would have checked and see, my goodness, price didn't break. Price is showing that price is respecting this level. So what do? You wait for that, see, New York candle open to the downside, reject. Okay. You're waiting for the next candle, reject. Still bearish. Waiting for the next candle, reject. Okay. I'm still waiting for candle reverse pattern, which is this candle right there. See? This candle right here.
Yep.
Alright. Now, let's move this exactly on the candle. Right? Let's go down to the 15-minute. We're looking for the EMA. Remember, are you writing this down?
Yep.
Alright. So your third thing that you're looking...
1 hour first. 1 hour.
We were on the 1 hour before.
Yep. 1 hour structure.
Yeah, so we do the 1 hour structure.
Yep.
We're going down to the fifth.
And now once you see a reversal happening, go down to 15.
Yeah, alright, let me go back over it once more. So we mark off the first candle.
Yep.
Look for a break to the upside or the downside. That's going to be a resistance or support. In this scenario, it's resistant. Yeah, is that right?
Yes, sir. Yep, resistance.
Then our support was from the previous day. Right, so reject. Price is respecting the structure from Asia session open, which is right here. Yeah, you're with me?
Yes.
Perfect. Now that we understand that New York session is now respecting this level of support and the new found support, then you say to yourself, I'm looking at buy, because guess what? My 1 hour is telling me on the EMA that price is bullish. So I say, okay, no worries. Let me go down to my 15-minute and see if price is rejecting the EMA. Let's have a look at that. This EMA is gold, and it took me a very long time to work out what settings I should use. Where am I? Hang on.
I think that's a different session, yeah.
Yeah, that's what I thought. For a sec, I was wondering what was going on.
Yeah.
Yeah. Okay. Now we're looking for the rejection of the EMA. Remember, that's your third step. Third to fourth step is checking the EMA and the 15. Okay. All right. Remember, previous day support.
Yep.
Price came back, tested it. This is your newfound support during the Asian Open. You with me?
Yep.
So let's forget this session for now. Always remember these 3 points. Mark off your Asian session. Look for a break to the upside or the downside. That's going to be your resistance or your support. In this case, you had a resistance. Then New York session still hasn't opened yet. Then throughout the late Asian London session, price tested your previous New York low, right? Broke back into your current daily support. Now you're in the New York session, which is right here on this candle. Where is it? You're right here in this region here. That's your New York session right here. Price broke this structure in your 15-minute, broke your EMA. Broke your EMA. You're saying to yourself, I'm not getting in for a buy yet because price needs to come back above it.
And you wouldn't get into a sell yet?
You wouldn't get in a sell because he hasn't broken this structure.
Yep.
Right? So price is still moving sideways. What am I waiting for? I'm waiting for price to come back. What did price do on that bullish candle? Remember I marked it off here? Remember I marked it off with the vertical line?
Yes.
So that's your first bullish candle after this retest throughout the New York. So this now, look what you're waiting for now. That retest on the 5 and the 15. Then what happened? Price came back. Price did not break. Price did not close below. Price remained on this Asian open structure or closed structure, whatever you want to call it, right? Now let's refine this. Let's go down to the 5-minute. Look at that. The EMA is respecting it on the 5-minute. Look at that. Look at that. Above. Remember I say you're looking for that 5-minute rejection, and that's going to be your stop loss. Enter just above the EMA. Stop loss right there. 2 to 1. It's practically just there. And look how much it ran all the way. So you'd have taken 1.5 for your position as soon as it hit your TP, and you just let the rest just run. Personally, I would have only targeted this high here. I wouldn't have gone any further because price seems to reject this area before, so I'd have only targeted this high. I wouldn't have targeted. So my 2 to 1 would be right here in this area here, and then just let it run to this marker here, and that would have been it. I would have been out.
So you would have taken off your first position at full TP, at full.
Yes, full TP would have been up here at half of your. So if you got 2 lots, you'd have take 1.5 lot here and take the last half a lot up here.
Yep. Okay.
But what I want to just bring to your attention, I don't really care about this 2 to 1 ratio at the minute. What I need you to focus on is to always mark off your Asian session first. Look for the break to the upside or the downside. That's going to be your resistance and support. Now what you're waiting for New York session to happen to test these areas. You're looking for New York to test one of these areas to show you rejection. Once it gives you the rejection to the downside, you now know price is going to go up. If it gives you a rejection to the upside, now you know price is going to go back down because it's already rejected this area before. So price rejected this area before. You're now looking, if New York session did not retest here, you're looking for price to come back in this area right here, and you're looking for it to reject. Once it rejects and come back down to this area right here, you're taking the sell all the way down. And now what you're going to do, you're going to target this level here, the first Asian Open of the previous times. As simple as that. Just follow those 3 things or 4 things that I've shown you. Mark off your Asia, look for the break or the break of up to the upside or the downside. That would be a support or resistance. Wait for New York to come in to test those areas. Once that happens, okay, you mark that off, drop down to your 15-minute, check what the EMA is doing, what direction, right? Once you found that, okay, it's going to the upside or the downside, then you now do your quick calculation how much risk you want to take once you go down to the 5-minute. The smaller your stop loss, the heavier your lot size. That's another tip. The smaller your lot size, the smaller your stop loss, the heavier your lot size. Meaning that you can go all in with all your whatever you're using for that day. If you're using 10, 15, 20 lots, whatever it may be, you can go all in, because guess what? My stop loss is very small. It's tested the area so many times that I know it's not going to come back and test anymore, because it's already done all the tests throughout Asia. It's tested, London tested, New York tested. Now I know, okay, I'm getting in, because as long as price doesn't break this structure here, I'm going in for the buy. I'm going in heavy. My stop loss is quite small, and I'm going all the way in. It's as simple as that, Winston. If you can just try this for a week, I guarantee you'll be profitable. If you can stick to New York session, follow my rules, you're in profit. There's no doubt. You pass the challenge, you pass the verification, no doubt. You just need to stick to one session and just follow this simple plan.
Yeah, I can stick to New York session, so I can jump on the chart at 11 and see what's happening, and then sort of go to bed by 12:30 if I'm not in a position already.
Yeah, because the thing is that you'd have had your whole day, you needed to do what you need to do, you come home, you'd have had dinner, you'd have relaxed, you'd have had a shower. Now you're now locked in, look at the chart, and it's so easy, because all you're doing is coming, mark off the Asia session, looking for a break, looking for a break to the upside or the downside, mark these areas off. The third thing you're waiting for now is look for New York to test those areas. Once New York tests those areas, the fourth thing that you're looking for down in your 15-minute is to check the direction and what's going on with your EMA, right? Once you see that, you drop down to the 5-minute, and then you're in. So you're doing 1, 2, 3, 4, and your fifth thing is entry. That's it. You're doing 5 things. It's like you're taking off in a jet. Once you've checked all your flight manuals, and you're good to go. You're just doing 5 things. If you can check those 5 things and they tick off, you're good to take off. 1, 2, New York. 3, drop down to 15. Check the EMA. 4, your fifth is your entry. That's it. Now you know that you're taking 1.5 lot as soon as it hit your first TP, and you let it run to your second. If it comes back, then what you do is, once price comes here and you've taken your first profit off the table, you need to move your stop loss right under here. Does that make sense?
Move the stop loss to the TP area, to your first TP.
Correct. Because you don't want that alpha lot for price to come back down here and take you out and you lose all that profit.
Yeah.
You want to secure that profit, as a little bit of it as well.
Yes, makes sense. So that remaining 0.5 lot.
Correct. Yeah, you're still trying to
loss to where you hit your TP for the other one.
Correct. Correct.
Yeah. Makes sense to secure the profit.
Yeah. You have to. Even if say for example that was $50 and it comes back and hit you at $25, you still made $25.
Yeah. I was gonna ask, do you use trailing drawdown? Like trailing stop loss, right?
No. I just manually do everything, because I just got an eye for it, so I just do it. That's the thing, you gotta manage these trades, and the thing is, you won't be able to manage these trades whilst you're at work. or having the kids around, because that minute when you should be on the chart, you're doing something else and it just comes back and take you out.
Yep. In this particular example, because the yellow line like around here, right, that's like 12 p.m. USA time.
You mean this vertical line here?
I wouldn't be in a trade. Like I wouldn't be watching it.
No, you mean you mean after you take the first the after this?
Correct. Yeah, because isn't this this is USA time, right? Time zone.
Yeah, that's right.
Yeah, so that's what. Yeah, that'll be pretty late already.
Yeah, late morning.
For this, late morning for this particular example.
Yeah.
No.
Because that does happen sometimes, that you won't get in just after 9:30, so maybe you just wrap it up and call it a day.
Yeah.
Or in this scenario, if you know that it is going to go in your direction, you could just set a limit order. You know what I mean? Just lower your lot size, lower your risk, and take a limit order.
Yeah.
And that's it. And just don't aim for your second TP, just aim for your first one. So if you mark up your chart and you realize from this region here that price is going to go in your direction, you just take the entry, move your stop loss down a little bit down further, but lower your lot size.
Yep.
And then you're just aiming for this section. So even if price come back and test this area, it wouldn't take you out. But once you hit your TP here, you're out, and you wake up in the morning, you're in profit.
Yeah, I think what I've realized when I was testing your strategy, like because I'm not that skilled yet, like my sniper entries aren't that great, so I've had to like increase my stop loss and hence lower my lot size.
Correct.
Just because I'm not,
Yeah.
as skilled yet, like I'm not doing sniper entries, so like if I keep it too tight, I would have been like,
Exactly. You've got the drift now, because you just said it. If you're gonna extend your stop loss, your lot size need to be smaller. And that's where a lot of people get caught. Stop loss is big, lot size is big. What happened? The market move against it.
That's a disaster, yeah.
It's just gonna crucify you. So you gotta go, and this is what I'm always saying to you. The reason why I do those 1.25 is because I know when I hit market execution, it's gonna go in a drawdown. So I'm just giving it 30. It's all these little tips and tricks. Once I hit my first one, I'm just giving it 30 seconds. Then bang, hit the next one. I give it a minute, right? Because you're watching the entry anyway. You can tell if it's in a negative, but you know it's gonna go in your direction. I give you a perfect example. Perfect example. So on Sunday, I was trading BTC, right? And sorry?
I saw your Instagram alert.
Yeah. It's crazy. So listen to this. And I sent it out exact time with me entering, and I think I was in like $10 profit. But few minutes later, it went negative, like, I don't know, $70-$80 per position, right? And I'm just laughing, because what did I do? I loaded it up again, because I know it's going in my direction. It's just pulling back, and a lot of people be like going, oh no, it's going against me. No, it's not. It's just testing that area. Going back to what I was saying, it will test the area again. And then what happened? My friend, it just plummeted down. Everything hit TP, the exact TP, and then it consolidated as soon as it hit my TP. Why is that? Is because I knew my areas of interest. Once you've seen it test, people be like, oh no, it's a buy. No, it's not. It's a sell, because I've checked everything. And those 5 things that we just went over is exactly what I do every day. Check.
In your alert post, you mentioned RSI. Do you sort of use that? I think you mentioned RSI was overbought at 70 or something.
Yeah, because you can tell when it's overbought as well. You don't even need the RSI to tell it that. You can tell by your eyes as well. But yes, for most people, because a lot of people are still using indicators, so you can use a reference of RSI. They will understand more. Because if you say overbought without giving them an indication, they get confused. Like, how can you tell if it's overbought or not?
Okay,
You know what I mean?
What I'm trying to say is, like, you don't really use the RSI.
No, I don't. No. What I show you on your chart now is I use that every day without fail. Because once you drop down to the 15-minute and you see that rejection of that EMA, you know that's going in a direction because you've checked all the other three confirmation and it's telling you that it's going in a direction. It's very rare, like out of 100%, I'll probably get stumped out 20% or 15%. It's because I'm always following and checking everything. Did you just want to quickly mark up this and show me?
I want to quickly go down to that 15 minutes.
Yeah.
I just wanted to make a little bit of understanding. So it was here, right? So like the 15 minutes, it's broken the EMA, 15-minute EMA.
Yeah.
So that's the bias.
Yeah.
So now you're like, okay, it's going to go up because we've marked the structures, retested the bottom.
No. I got to stop you. Let's go over it again. It's very important that you understand this. Yep. You must use this word for word.
Okay, so Asia open.
Yes, perfect.
Is the support.
Correct.
And then during, I guess, Asia and London is gone up.
Correct.
That's created the resistance.
Correct.
And then, so it's still London.
Correct.
London going down and it's tested previous days or previous New York's.
Perfect.
Yep.
Perfect.
But it hasn't broken down. So, yep. And then, I guess, pre-New York, sort of trending up.
Perfect.
Hasn't hit the resistance. Hasn't hit London's resistance yet. So it's still sort of, I guess, ranging.
Correct. Correct.
New York's happened at 9 o'clock. So if I jumped on the chart, I would see this.
Yes.
Bearish, but I wouldn't take a trade yet because it hasn't broken.
Exactly. It never broken it. Yes.
Yeah, it needs to break a structure, like.
Correct. Correct.
Wait a bit. Yep. And then I would only take it.
Break and retest.
Breaks and retest here.
Perfect.
It hasn't done anything here. So it's just sort of going up. And then I'll probably call it quits already because it's like too late already. Or good. I don't know. Go to bed.
But it's alright. But listen.
If I see this sort of pin bar.
Yes. You'd have realized that you're in. There's a chance that if you.
There's a chance that you could go up.
Exactly.
I could do something like this.
Yes. No, maybe a little bit more up with the stop loss.
Oh, okay. So.
Yeah. Target. Yeah. No. Go back down a little bit, just below the New York previous. Yeah. Just there. Yeah. And then first one. Yeah.
Oh yeah, first one. And
just do the first one because you would have been in bed. You don't want to take any high risk. You just want TP1 and that's it. You're done.
Yeah. And I just forget. So I'll probably just.
That's it.
Risk 1%.
That's it. You wake up in profit. Worst case scenario, you just take out your stop loss and that's it.
Yep. Okay.
And another thing that you could potentially do, which I don't advise it, but if for any unknown reason price was to reverse on you, what you could do, which I don't advise it, but because you've done all your due diligence and you know that if price reject this area, it's going to sell off. What you could do, which I don't recommend it, but just in the case where you had your stop loss, which is right here, generally if price, you haven't got a thingy there, what I would do, that's your stop loss of the previous one. That's your previous stop loss, right?
Yep.
Sorry, that's your current stop loss. So what I'll do, I just box off your stop loss, come here like this. This is the tricks that I'm showing you. And what I will do, going to bed, I will then set another limit order here. Stop loss just above the line again. And I'm targeting right there. Or even better yet, I'm targeting right there. Bang.
But you would set up a sell limit order.
Yes.
Well, what I mean that.
The reason, I don't advise it, but the reason for that is because you're going to bed and you can't monitor the trade. Just in case this one didn't hit your TP and it reversed for any unknown reason, you'd have made that money back.
Yep. Okay.
But it's gone in the sense that you'd have analyzed it and know that it's going to eat your TP. If that's the case, don't worry about this. But in the case that it doesn't fully hit your TP and it, for some reason it reversed, you're just still in profit. Because I guarantee you on this one, if it tested here, 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 and here, and it didn't make it all the way above here, I guarantee you it's gonna cave and just drop. So you're guaranteed to make money here if it breaks this structure. That's a fact, because this was the previous low, which is in New York. You know what I'm trying to say? So you've got it perfectly, but I don't advise this second move. But I only mention that because you're going to bed, but I don't advise it because I'm an advocate for one entry, one session only, win or loss, so win or lose.
Yeah, I think I need to stick to that because I was just compounding my losses by taking that.
Exactly. So just stick to that. So on your notepad you should have 5 things that you need to do before you take a trade. Is that correct?
Yeah.
All right. So my question to you is now, just stick to that one session, which is New York session. You're checking those 5 things before you take an entry. You can also tell if the market is moving sideways from the previous day, because it will show you that it is moving sideways based on what I've just shown you. It will tell you that you're moving sideways. And if you're moving sideways, all you need to do is set up your alerts for it to break those structures. Once it breaks those structures, now you're looking for a buy or a sell. But until those alerts get triggered, you're not doing anything. You're sitting on your hands. And that's the hardest part. But it's going to save your money and stress. So 1, 2, 3, 4. The 5th one is your entry. Easy peasy. So I will be checking up on you. Just let me know when you're going to kick off the other account. But in the interim, just keep practicing, right? But I will be checking up on you and find out how it's going, because I know this strategy is solid. It is solid, especially with the EMA in it. You cannot go wrong, because that EMA, I've tested every single number there is for it to work. 6 didn't work, 12 didn't work, 8 didn't work, 22 didn't work, 24, 18 didn't work, 50 worked. And it's...
And you only take a trade when it's, I guess, like a buy trade when it's above that EMA?
Correct. If it's not above, I'm not interested.
Yep. And is that based on the 5 minutes?
Based on the 5 and the 15.
So you look at a 15-minute first?
Yeah.
And then you'll drill down again?
Yeah, you go down to a 5-minute just to refine your stop loss. And remember that EMA need to be within your structure, meaning you need to see it within, so it either needs to be in this region for a buy, or it needs to be above for a sell. Say for example,
it's like retesting.
That's right. So I just give you So for example, this was your EMA. You know it's there's a high chance that price could reverse, because price would have hit it below it once. You're waiting for it to come back up again in this region, and this is also your structure as well. So it's a clear indication that price could reverse. So if I were you, I would not be looking for any buys below this line. You'll be looking for buy above it.
So you wait for 15-minute close.
Yes, correct.
Not the EMA. And drill down to 5 minutes just for the stop loss.
Correct. And remember as well, the smaller your stop loss, the heavier your lot size, because it's still going to equate to the same 1% as long as you work it out. So always remember, work out your lot size to match your stop loss. So if it's 25 pips, divide that by whatever you're doing, and then that will give you an exact number, and it must fall within your 1%. But always don't take the full 1%, take probably 90% of it. Does that make sense? So if it's $1,000, try and aim for 900 or 950.
As in the TP?
Yeah.
Yep.
No, the stop loss.
Oh, the stop loss?
Yeah.
Yep. Why is that? Because of the spreads?
Yeah, and because you're using a funded account as well. I would aim for 900, to be honest with you. I normally aim for $826, just in case. That's why I use 8.26 lot size when I'm trading Nasdaq, because it's obviously $1 per go. So yeah.
Okay.
And those are the tips and tricks. And always remember, break up your lot size, because
Yeah, I'll start doing that. Break into 2.
yeah, and then use market execution, and then just give it 30 seconds. Sometimes it can give it 15 seconds. It's all right.
Yeah.
You can tell by looking at the
direction. Yeah.
you can tell, right?
Get that feel. Yeah.
Yeah, you got the feel. And these are the things that you're going to learn after. You can say, oh yeah, it's going in my direction, just hit it. Doesn't matter, just hit it. And you find that one will be negative and one will be positive, and then gradually they all will be positive, and then you'll be like, yeah, I'm in the money now. And then once you're at 25 to 50 pips, move it to break even.
Yeah, that's the best feeling when you enter a market and then like after 15 seconds it's like already break even.
Exactly.
That's when you know, yeah, this is...
It's going in a direction.
The worst is when you enter it and then it goes into like negative $100 already. You're like, oh no. It's going down, yeah.
And the worst part about it is that you don't know your structure. That's the worst bit. But now I've given you the cream on the cake, and if you stick to those 5 things, but the key to it is stick to one session.
Yep, that's the issue. Yeah.
That's it.
Yep.
Stick to that one session. Stick to that structure. Stick to the EMA. Stick to the 15 and the 5. Execute. Stick to that, and you're good to go.
Thanks a lot, Marlon. I just have to go.
Yes, me too. All right, Winston. I will keep an eye on my message, and I will check up on you as well. Okay?
Are you able to send through the recording?
Yeah, I'm recording it. Yeah.
Perfect. Thank you very much.
No worries. I'll send it probably to you later on. All right. I just got a few things. Yeah.
No problem.
All right. You take care now.
Sure.
Bye bye.